Morning, everyone. How are we doing today? It is October 27th, Tuesday, October 27th, and I have been up for a little while because of this guy right here. He's not feeling so well, so I've been getting up about 2:30 the last couple of days just to take care of him. For those of you that are concerned, thank you very much. He is 15. He is now on a couple of different medications, and that means I get up early, and it also means I take a nap in the afternoon, so that's okay. What that means for you, though, is we're ready to rock and roll with the daily financial news, but I've also created a couple of other presentations that you will get today. One, Brian Lebo and I have been talking about the Las Vegas market for quite a while now, so I spent a couple of hours looking at the market and really trying to understand what is going on, right? It has set record price levels the last 3 months in a row. I don't think any of us would have probably predicted that back in February or March. So I'm trying to figure out what's going on there from an investment perspective. So I've collected a lot of data. You can look for that video sometime this morning. And then I'm actually getting some consulting around the brand one rental at a time. You saw a video or an interview last week with somebody who focuses on brand. We agreed in that interview to kind of take the covers off one rental at a time, and I prepared some material for him, so I'm going to share that with you just to continually share with you the story of one rental at a time. Get your feedback, let me know what you think. But again, I'm an open book. I'm here for you, so we will be doing that. As we get started with the daily financial news, remember, go ahead and hit subscribe, thumbs up, notifications. We do this every day about 7:30 in the morning, and what we are going to be doing is continuing that trend. So if you like that, hit them, get notified. But also realize if you subscribe to my channel, you are going to get a lot of notifications. I average 3 to 4 videos a day. This is what I do for fun now. I've already achieved financial freedom, and I'm trying to pull people up. So don't be upset if you get 3 or 4 videos a day. They will all be original. They will all be live. And, that's for you to do. So at the end, what I have for you today in the daily financial news is a reminder. This is the third day in a row. I want to remind you of this. This is going to be a bumpy week. Lots of stuff going on. This week does not make a trend make. Don't make any decisions this week that will have long-term consequences. We are 1 week out from the election. We are going to be hearing about caseloads. We are going to hear about Congress failing us. And something I'd like to put out there now is we actually marketed it stimulus wrong. Stimulus was the wrong name. It should have been marketed as life support. That should have been what it was called. This was life support. We have a K-shaped economy where part of our economy is not really feeling it. In fact, with asset prices in market and real estate, they're doing okay. But we have the other side that's not doing well. So it should have been marketed as life support, and that's how we should have treated it. We should have held Congress's feet to the fire, but that is a conversation for a different day. One thing I'd like to talk about is kind of earnings week. We talked about that on Sunday. This is going to be a big earnings week. A couple of them that I highlighted for you. 3M beat on top and bottom line. A lot of it around health and safety, masks. Caterpillar missed. Caterpillar earnings were down 54%. All regions, all segments. That was an interesting one for me, and we talked about that over the weekend being a telltale sign, right? We are going to see Q3 GDP numbers Thursday, and what I was going to be interested in, was it all consumer related, which is what it's feeling like now, because Caterpillar is one of those big industrials, right? Our company's investing. And what I see in the numbers so far, for example, Caterpillar, nobody's investing, no companies. But you go to Harley-Davidson, total consumer stock. Harley-Davidson was up 78 cents on a 21-cent expectation. So the consumer is just addicted to spending. We are addicted to spending. But companies are not investing, and that will have a longer-term impact, in my opinion. The other thing that was important for us that we talked about over the weekend is, are companies going to give Q4 guidance? And for the most part, they are not. Consumer-based companies are not giving guidance for Q4 or Q1. That needs to be at least a yellow flag. I would call that a red flag. This is sort of like people coming out of Q1 and going, you know what? We don't know what's going on. We are out. And they're doing it again after what has been generally a very good quarter. So companies, they see a risky Q4, just like you and I have been talking about. JetBlue announced they're only burning $6.1 million a day. You know, let's be excited about burning, cash burn, $6.1 million as an airline. We need less airlines. I mean, or less flights or less capacity or something. It is pretty clear. Big earnings after hours is Microsoft. We will see if it continues the data center trend, which seems to be very big in the market. See AMD's great earnings. On the AMD front, not only did they announce record earnings and huge growth, top and bottom line, but they announced an acquisition of Xilinx. I think we've talked about this about a week or two ago when it was rumored. It did go down for $35 billion. This is a 25% premium to Xilinx closing stock yesterday. So that is, a significant price to pay. AMD is saying it's going to be accretive right away, meaning that there'll be earnings falling to the bottom line. This is about the battle for the data center and the like. So AMD is not resting on its laurels, and it's kicking Intel's butt, as we've seen a couple of quarters in a row now. Intel's in a bad spot. Case-Shiller came out today. Again, we talked about this over the weekend being a number, and we were right. Appreciation is up. And just like we said, or I theorized over the weekend, the 10 city is the lowest, the 20 city is higher, and I promise you the suburbs are even higher. This is very interesting. Right, Case-Shiller is up 5.7% nationally, with some markets like Phoenix up 9.9%, Seattle 8.5%, and even San Diego at 7.6%. So pretty good numbers. Again, remember, it is record low inventory, low interest rates, and high demand. And again, the suburbs are winning. I do believe that the Case-Shiller index is going to become less interesting, less valuable, because it was configured all those years ago around 10 or 20 major metros. And what cities are losing today? Major metros. So it is going to miss appreciation. Remember what we talked about on Wednesday last week? Nationally speaking, housing was up 15%. Well, look at Case-Shiller. It's only up 5.7%. This is the error of Case-Shiller. It's missing the suburbs. It's missing 80% of the country. So it will be interesting to see how long it takes the talking heads to point that out. My guess is they never will, because they're just going to talk about Case-Shiller and move on and not really realize that they're missing or painting an inaccurate picture. Next up, lo and behold, we have another industry setting up a bailout request. So airlines, we've talked about airlines, got in the CARES Act. Hotels, we've talked about. Theaters, we've talked about. Now guess what's next? Universities. Universities are talking about falling enrollment, falling student housing. Just shocking when they have all those expenditures and they've raised tuition all this high, and now they've had 14% drop in freshman admission and 50% drop in student housing. When you have a cost structure that is that high, it's just like you and me, right? When our cost structure or our rat race is too high, that is a problem. So pretty crazy. Again, freshmen not down 14%, down 16%. My mistake, did that from memory, and I should have looked at my notes. The other thing we saw today is it looks like Las Vegas Sands, looks like the owners might be looking to sell $6 billion. It's interesting, Brian Lebo sent me a text this morning saying, check this out. There's real talk about, is the strip going to be the strip, through this? Can it survive? And then the last thing I saw is it looks like Wells Fargo is trying to raise capital. Wells Fargo is the one big bank that's probably in the most stress. It's been capped by the federal government given past practices. Looks like it's up to selling its corporate trust unit for potentially $1 billion, and is even evaluating selling its student loan portfolio, which is currently valued at $10 billion. So pretty interesting. Again, at the end of the day, this is your daily financial news. If you like getting your daily financial news in little 10 to 12 minute chunks, hit subscribe, give me a thumbs up. I would like it. Yes, that's my puppy grumbling. He's not happy. He is not happy. I didn't realize the microphone picked it up. I'm sorry. But he's not happy, so I'm holding him. I love him. So, again, daily financial news, subscribe, thumbs up, greatly appreciated. I will be creating a couple of videos this morning. And, of course, it's Tuesday, so we have Omar's interview at 9 o'clock. All right, everybody, have a wonderful day. Take care of yourself. Bye.